You know that feeling, right? You hear about uh, governments messing with currency value or maybe banks looking a bit shaky.
Hmm.
And suddenly the money you've worked hard for, it just feels less solid, less yours somehow.
Yeah, definitely. It makes you think.
Does it ever spark that thought, like, could there be another way, a different system maybe, where you have a bit more direct control?
Absolutely. And that feeling, that sort of underlying worry and the desire for more financial say-so, that's pretty much what got cryptocurrency started. People began looking around, beyond the usual banks and government stuff.
And that's exactly where we're headed in this deep dive. One of you actually sent us something really interesting.
Oh, yeah.
It's a transcript from a YouTube video, it's in Hindi, called Crypto Trading.
Oh, say.
Basically, learn crypto trading and earn from the Mahindra Dogni channel.
Okay, a trading guide.
Well, yeah, it's framed that way.
Yeah.
But what really jumped out at me was how it explains the why, the fundamental reasons crypto even exists and why it's become such a big deal.
That's crucial. Honestly, understanding the why is way more valuable, I think, than just chasing profits. It's about understanding a potentially huge shift in how we even think about value.
Totally agree. So our mission today, kind of sparked by that video, is to really dig into those core reasons. Let's try and cut through the hype, get a solid grasp on the basics behind crypto's rise.
Sounds good. Where does the video start?
Right, so it kicks off with this key idea. Understanding value comes first. Profit is secondary. It's not just about the money.
That's a great starting point. Often missed, I think. You need a solid idea of what gives something value before you can trade it effectively. Otherwise, you're just guessing, right?
Exactly. So then it brings up some of the big names you hear about: Bitcoin, BTC, Ethereum, ETH, USD coin too.
The usual suspects.
And it asks the question loads of people probably have: why another currency? We've got rupees, dollars, whatever.
Mm.
And video's answer is pretty bold. It says cryptocurrency aims to, quote, rule the world.
Wow, okay. That's ambitious.
It is.
But it does capture that early vision, a global digital money not tied down by borders or controlled by the old financial players.
So to get why they'd even aim for that, the video does this really neat thing. It walks us through the history of transactions, or lending, as it calls it. Starts way back with the barter system.
Ah, the classics. Trading goods directly.
Yeah, like, I've got too many bananas, you've got guavas, let's swap. Simple.
Simple, but messy sometimes. The video points out, what if the things aren't worth the same? Like, its example was trading a cat for a donkey. It gets awkward. Subjective.
Right. Doesn't scale well as societies get bigger, just not sustainable.
Definitely highlights the limits.
So phase two, the gold standard. Using gold coins. We've all seen it in movies, right? Little pouches of gold.
Yeah, gold was definitely more universal, easier to carry than, say, a donkey.
True.
But gold has its own issues, as the video notes. There's only so much of it, it's hard to find, hard to mine.
And lugging around huge amounts for big deals. Not practical.
Exactly. Logistical nightmare.
Which brings us to paper money, the stuff in our wallets. Government-issued currency.
Backed by trust.
The video points to that promise, printed on the notes, the central bank promising to pay the bearer. It's all faith in the government, the institution.
It is. And here the video mentions Robert Kiyosaki, the rich dad, poor dad guy.
Oh yeah, I know him.
His view, which the video includes, is that this paper money doesn't have real value and governments can just print more whenever they want, potentially devaluing it.
It's a critical perspective.
Yeah.
Definitely taps into that distrust of central control we mentioned earlier.
It connects directly back to why someone might want an alternative. Something perceived as more stable, maybe less controlled.
Makes you think. Okay, moving on. The video talks about the shift to digital money, paying with phones, using less physical cash. We all do it.
Tap and go, super convenient.
Definitely. And this convenience, this digital shift, really paves the way for understanding why digital currencies become relevant.
It's a natural step, yeah. Faster, easier. But it's important to remember, most of those digital payments, they still run on the old centralized bank systems.
And that's the core why for crypto, according to the video. Tackling the problems, the weaknesses of those centralized systems. It uses this quite strong analogy. It says the central bank, like the RBI in India, and the finance ministry are sort of holding a gun to the banks, basically showing who's really in charge.
That's a vivid way to put it. It highlights the power imbalance, the concentration of control in those central bodies. They control the money supply, interest rates.
And as the video points out, they can even demonetize currency.
Yeah.
Like that sudden demonetization in India a few years back. That brings the idea of central control home very quickly for people.
A very concrete example of that power affecting everyday people's savings.
Yeah. And the video also touches on potential myth management in banking. Mentions things like huge loan defaults, people like Nirav Modi or Vijay Mallya allegedly fleeing with money.
Right. The point being, that money in the banks, it's ultimately the public's money. And when things go wrong in that centralized system.
The public often pays the price.
Yeah.
Exactly. That feeling of vulnerability, it pushes people to look for alternatives.
Which leads us to a major turning point.
The 2008 financial crisis, Lehman Brothers collapsing. The video flags this as the key event. It exposed just how fragile those big institutions were.
And it directly inspired Bitcoin's creation. Think about that. A global meltdown sparks a whole new kind of currency.
Wild. Public trust in the old system just plummeted after 2008. It showed how everything was connected and how spectacular the failures could be.
Bitcoin really emerged from that specific climate, offering a system designed to avoid those single points of failure, those central authorities.
So enter Satoshi Nakamoto. Still don't know who that is.
Still a mystery. It could be one person, could be a group. But the name is on the 2009 white paper.
And the video actually tells you, the listener, go search for the crypto white paper or Bitcoin white paper online. So it's really important.
It absolutely is. It's the foundational document, lays out the tech, the philosophy, everything. A radical departure from how money worked before. Definitely worth a read if you're interested.
And the big idea.
Decentralization.
Taking money control away from governments, away from central banks.
And giving more financial power, theoretically, to individuals. It's a massive shift in thinking about who holds the reins, challenging the whole traditional structure.
The video breaks down the name cryptocurrency too. Crypto, meaning encrypted.
Yeah.
Like the security on WhatsApp messages.
Exactly. Secure. And it connects that to blockchain technology.
The underlying tech.
Yeah.
Like a shared digital ledger.
Precisely. A distributed ledger that everyone involved can see, but nobody can easily change once something's recorded. The encryption secures the transaction, the blockchain secures the record, builds trust without needing a central middleman.
Got it. And Bitcoin itself. The video points to the white paper's title. Bitcoin, a peer-to-peer electronic cash system.
Peer-to-peer, that's key. Person-to-person, directly. Cutting out the banks, the payment processors, that's the vision.
Fascinating. And the timeline. It launched in 2009, but only really took off, popularity-wise, after maybe 2018. Like a while.
Yeah, early on it was mostly tech people, cryptography fans, folks interested in privacy. Took time for the mainstream to catch on, to understand the potential.
So the video's definition of cryptocurrency, it calls it a form of digital currency for online transactions.
No.
Virtual currency.
Okay, pretty standard.
But the key thing it stresses is that it's basically digital data. Anyone, an individual, a company could potentially issue it. And crucially, not controlled by any government or bank. That seems to be the absolute core difference.
That lack of central control is the defining feature. It brings possibilities, but also challenges that traditional money doesn't have.
And this lack of control, the video argues, is what led to crypto trading. People saw the potential, the value started moving, and boom, a market is born.
Makes sense.
Then around 2012, other coins started appearing. Altcoins, right?
Yep. Alternatives to Bitcoin. That really broadened the whole ecosystem. Lots more to trade, a lot more projects.
Okay, so now the video shifts gears a bit. It gets into the practical side. Crypto trading basics, specifically spot trading.
Right. Buying the actual coin.
And it makes a nice connection for people who know the stock market. It says about 80% of the concepts overlap, like candlestick charts, reading patterns, that kind of stuff.
That's helpful. If you've looked at a stock chart, a crypto chart won't look totally alien. Supply and demand, technical analysis, those ideas carry over.
So spot trading, the video calls it spot Lena. It compares it to long-term stock investing. Like buying shares in a big company, maybe Reliance in the Indian context, and just holding them.
Yeah, the idea is you take a spot in a crypto you believe in for the long run. Maybe you like its tech, its future plans.
Similar to IPOs and stocks, but for crypto, they're called ICOs or IEOs, initial coin offerings.
Exactly. Ways for new crypto projects to get funding, similar idea to an IPO. So in spot, you're buying the actual coin, holding onto it, hoping the value goes up over time.
And it makes clear there's a huge range. Famous coins, obscure coins, all sorts of prices.
Which is important because
people might think you need a fortune to start, but you can buy tiny fractions of coins, right?
Absolutely. Divisibility is key. You don't need to buy one whole Bitcoin, which costs a lot. You can buy, say, $50 worth or $20,000 worth, whatever fits your budget. Makes it accessible.
Good point. Now, the video initially describes spot trading as basically buy and hold. You buy it, wait, sell later, hopefully for profit. It doesn't get into complex stuff like short selling at first.
Right. The simplest form is taking a long position. Buy low, sell high. Shorting is betting the price will go down. That's more advanced.
It also really stresses that crypto prices are often driven by news, more so than traditional stocks that have company earnings reports and things like that.
Definitely. News about regulations, tech breakthroughs, even just, tweets from influential people can move the market a lot and quickly.
So you got to stay informed. The video uses CoinDCX as an example. Platform says it's not sponsored, just to show how you'd look up a chart, like Bitcoin against the rupee, BTC-INR.
Just visualizing the interface helps make it less intimidating for newcomers.
And it repeats that point about buying fractions, like using 20,000 ART part to buy a part of Bitcoin.
Reinforcing that accessibility.
It also briefly mentions using risk-reward strategies, similar to stock trading.
Which is sensible. Managing risk is crucial in any trading.
Then it uses a current example, Bitcoin's recent price action. Talks about potential retailer traps when prices spike.
Uh-oh. Buying at the top.
Potentially, yeah. Linking it to news, like maybe an election outcome and speculation about a leader being pro-crypto. It warns about that news-driven volatility prices can jump, but they can also drop fast.
That's a really important warning. Hype can be dangerous. Buying just because the price is shooting up is often how people get burned. Understanding charts, technical analysis helps avoid buying at the absolute peak.
Right. You know when might be a better time to buy, maybe lower down.
Yeah.
Okay, one last really practical point from the video, tax.
Ah, yes. Important.
Specifically for spot trading in India, it says there's a flat 30% tax on profits, period. Doesn't matter what your income tax bracket is.
Wow. Okay. Flat 30% on any gains from spot trades.
Yeah, it gives an example like invest euro 1 lakh, make a 10,000 profit, you owe 3,000 in tax. Simple but steep.
Good to know. That definitely impacts your net return.
And it quickly mentions that future and options trading in crypto might be taxed differently based on your flab, but says that's for another time, kind of teasing future content.
Sets up the next lesson, maybe.
Exactly. Which leads to the call to action. The video basically says, hey, if you like this, if you want more basics like how to read those charts for spot trading or understand coins like Bitcoin and Ethereum, better leave comments.
Makes sense. Get feedback from the audience.
And it announces their next video will be on future trading in crypto, telling people to subscribe, which for us just means stay tuned for our next deep dive.
Always good to know what's coming next, building on the foundations.
So let's try and wrap this up. The big takeaway from this source, this deep dive, cryptocurrency really came about because people saw problems, limitations, vulnerabilities in the traditional money system run by governments and banks.
Yeah, it emerged as a response, offering something different. Decentralized, peer-to-peer, aiming for more individual control.
It's a pretty fundamental challenge to the status quo, driven by that desire for more transparency, maybe more autonomy, less reliance on the old middlemen.
Definitely represents a potential shift in finance.
Okay, so here's something to chew on, a final thought maybe. Given this whole move towards decentralized finance, DeFi, and all that, what could the really long-term impact be beyond just trading coins?
Good question.
I mean, could it genuinely reshape our economies, our institutions? What would a truly decentralized financial world even look like? And what are the hidden challenges or opportunities we haven't even thought of yet as this tech keeps evolving?
It forces you to think about some pretty big questions, doesn't it? The future of money itself, how things are governed in a digital world, who holds financial power. It's fascinating stuff.
It really is. Well, we hope this deep dive gave you some clarity, maybe a solid foundation for understanding why crypto exists and why it's such a hot topic.
Hopefully demystified it a bit.
Yeah. Until our next exploration, keep thinking, keep questioning.